Hello and welcome to the first quarterly market update of 2023 for IMFG. I'm Angus Dockrill. Joining me today is Dr. Steve Garth. In a quarter that had a whole bunch of global macro events continuing to dominate the news, be it inflation, interest rates, and in more recent times the collapse of some banks. What's been happening in markets, Steve?
Well, let's start with the Australian market, Angus, and actually we kicked off in great style. In fact, January had a return of 6.2% on the ASX 200. That's the highest January return on record. Then kind of flatlined a little bit. There were a couple of interest rate rises in February and March by the RBA. But to your point, on the weekend of March the 11th and 12th, we heard the news that Silicon Valley Bank had collapsed. By the way, Angus, I'm pretty sure no one in Australia had ever heard of this bank before it collapsed. But that did have ramifications around the world.
And how did that express itself?
Let's have a look here over both the Australian market and the international market over a slightly longer term over the last 12 months. And you can see that they're tracking along pretty well. When Silicon Valley Bank collapsed, you can see that the Australian market has fallen a lot more than the international market. There's been a dislocation there in the returns.
And what explains that dislocation? That sounds a bit unusual.
It seems odd, given that the Australian banks are the best and the safest in the world. Why has Australia come out worse? It's only because banks make up about 33% of our market. Overseas, banks make up about 11% of the world market. So it doesn't have the same effect.
Are there any other reasons for that dislocation, Steve?
Yeah, there's one other big reason, and it's got to do with high tech stocks. Now, you can see on this chart here where we look at different markets, with the NASDAQ, that chart in the middle, it's got a return of over 18% for the quarter.
Wow.
It's incredible. But remember, Angus, last year, tech stocks were the ones that got hit the most and are down by 33%. Now, to our point about banks earlier, tech stocks make up a big part of the international market. In America, they're around 40% of the S&P 500. In Australia, it's about 4%.
And how's that, all these worries expressed in the bond market?
So when we look at the bond market, and I'm going to show some yields here, Angus, so keeping in mind that when bond yields go up, bond prices go down, but it works the other way. When bond yields go down, bond prices go up, and you can see that the quarter was not looking that good for bonds. So remember, last year was the worst year on record for bonds. But when Silicon Valley Bank collapsed, you see these yields fall. They fell as much as they have since the GFC. And so those falling yields have made positive returns.
Thanks for that, Steve. That wraps up the quarterly update. Should you have any questions, please reach out to one of the team. We look forward to being of service. All the best.